Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Now, I'm very excited for today's show. This is one of our Ask the Expert episodes. We have two absolutely amazing people on the line. We got a guy with a ton of experience in the multifamily and real estate in general, Matt Faircloth. So Matt has been a full-time investor for 15 years. In that time, he successfully completed projects involving dozens of fix and flips, office buildings, single-family homes, and apartment buildings. He started with a $30,000 private loan and has now completed over $40 million in transactions using private money. He's a regular contributor and podcast guest on biggerpockets.com, has an active YouTube channel dedicated to educating investors, and is the author of the Amazon bestseller, Raising Private Capital, How to Build Your Real Estate Empire with Other People's Money. That said, Matt, welcome to the show.
Thank you, Brian. Great to be here. Thanks for having me.
Yeah, so I usually read one book a month on multifamily, and your book was the one that I read in May, and I tell you, I absolutely love it. I think it was, full of actionable information in there. I think it's something that anybody can pick up. It doesn't matter what level people are at. I mean, we've raised, $4 million, in the last year, and I had a lot of takeaway items from that. So that said, great book. Thanks for writing it. Thanks for putting it out there.
You're welcome. Thank you for reading it. And I know you told me you just wrote a review on it, so I appreciate you doing that. For anybody else that read it, please take a moment and write a review on Amazon because it really helps propagate the message from the book and helps make people aware of it. And it was a pleasure to write. So thank you for your compliment.
Yeah. And it was a 5-star review. No, no arm twisting or anything like that.
Nope.
Sincerely, it was a great book. So, very, very happy to help promote that in any way I can. I've been following you for a while. I got to tell you, you've got a very impressive group. You got a lot of stuff going on. So if you would please, why don't you take a minute to tell us a little bit about your background and your history up until the point where you decided to do apartments. I know there was a lot of fix and flips and other things in there, but
sure. We've always worked on opportunity. We're just real estate opportunists as a company over the last 15 years. And we tried a few different things, levels of real estate that worked at our capacity at the time. We're not this company that just took a weekend course on buying apartment buildings and decided to become apartment building experts after the weekend was over or something like that. We've been doing a lot of residential stuff. We've done a lot of flips, and that's really just has to do with the market. I mean, a lot of the flips that we did were in the run up to the crash, and then in the rebuild after the crash. A lot of the flips that we did and that we were successful with were then in that. So we've always been just kind of playing the market that we're in, because a good friend told me years ago, you can't change the market. You can only hope but to participate in it. Mm-hmm. And so at the time and at our capacity, fix and flips and small residential deals made sense. And as our capacity changed and as our knowledge base and as our team changed and as our capacity for raising capital changed, we've slowly grown bigger and bigger into apartment buildings. So just a natural migration that way. But we've been in deals that worked for us at the time. And I still own a lot of that stuff that we bought in 2005, 6, 7 pre-crash, and own a lot of things that have that we bought right after the crash too.
Well, that comes with that's a lot of experience. I mean, I think a lot of people in the business now are haven't experienced a crash and don't have the same lessons learned. I mean, we're going through a little hiccup. I'm not sure if I'm going to call it a crash yet. I think we need another year or two to really decide that one. But
I don't think we're yet. The other shoe hasn't dropped yet yet, but we'll see.
So let's address that. How are you doing things differently, right now in this COVID environment?
Well, COVID changed a lot of things, of course, and I think that it exposed that a lot of folks that invest in real estate up until COVID were playing the rise, meaning like they were like, "Look, I'm going to buy an apartment building, and it's not going to make any sense or make any money at all when I buy it. But what I'm going to do is I'm going to renovate it and I'm going to raise rents, and I'm going to play a rising economy by raising rents and encouraging people to pay me more money for this property, mainly because it's got new countertops and stainless steel appliances." Which, by the way, that was a game that this isn't a new game. That's a game that was playing in 2005, 6, 7, right?
Yeah.
Renovation to play appreciation. And that's been going on up until COVID hit. And what it's changed, I can't speak for other real estate investors. And I think there's other folks that are still out there trying to play the renovate to ride the appreciation tiger themselves. And that's just never been a game DeRose has played. We have been, always will be a cash flow company. And so we invest for cash flow, we invest for dividends, we invest for yield now. And so I've rarely done a deal to bet on the coming because my crystal ball is broken. I'm just not 100% sure what's pre-COVID, because we just never knew what was going to happen. So we would invest for what was going to happen then. And so we've always invested for cash flow. The COVID has caused us to even further push into deals that just make sense at acquisition. Yeah. So the deal we have under contract in North Carolina in Winston-Salem right now produces great cash flow day of closing. And we're only going to increase that cash flow, but I'm not going to cross my fingers and hope that it cash flows or, put a bunch of supplemental capital into the deal so I can, pay investors pref and cross my fingers and hope that it does, but hope that the market forgives, Yeah. And I was talking to another investor the other day, and he said that a growing market forgives a lot of mistakes, which is good. And but the whole U.S. has been growing for a very long period of time in real estate values and in rental values and everything like that. And I think we're going to see a lot of mistakes get exposed as the market. Maybe I think more likely you're right. The market's more likely going to level off versus crash or anything like that. But I think that we're going to see a leveling out, which is going to change strategies and maybe push people more towards cash flow.
I think some of the hot areas of the U.S., you almost don't cash flow, So I was born and raised in Salt Lake City, and I started, the first place that I started looking for multifamily was Salt Lake City. And I mean, I had to use like a 5%, 6% appreciation year on year, just for the deals to pencil, and they had been getting that for the previous years, but you just can't count on that, And I wish I had a crystal ball. I mean, yours is broken. At least you have a broken one. But without that crystal ball, it's really hard to, really hard to bank on that. So I appreciate that. I think that's a very solid investment strategy. You invest for cash flow, and if it's cash flowing day one, I mean, you're going to be okay. If you don't mind, what's your motivation for investing in apartments and real estate in general? What's your big burning why behind it?
To make lots of money. No, that's not. No, I think if your motivation is to make money, or because if I talk to so many people, and a motivation I can tell is to make money or because they hate their job. Mm-hmm. Number one, if you're investing because you hate your job, just go get a new job, because real estate investing is a big fat job too, or can be. And secondly, money is only a vehicle. It's not the why, right? So for us, for my wife and I, our why, and I wish this DeRose sign behind me had it written on there, but it doesn't. It's to transform lives through real estate. Mm-hmm. We believe that real estate investing can create transformation for the people that live in it, for the people that work for it, and the people that invest in it. And so we're all about creating a better life for people through our business. That's what we do. And that's why I do what I do, because I think that we can leave a real impact on people if we run a business that's beyond profit.
Yeah. And I was following your YouTube channel long before, we met for the first time, but, you put a lot of free content out there. I think that's a testament to what you just said is, you're looking to help other people change their lives, and just putting all that free content, and it's a very good channel. And, I love how you break a lot of things down, almost Barney style, so, anyway, I really appreciate that, and, appreciate what you do. So if you would please, could you give us kind of a rundown of either one of the deals you've done or the typical type of projects you guys are doing right now?
Again, not pound on my chest because this is a large deal for us too. But it's a 336 unit in North Carolina. Went through a typical bidding process, best and final, and everything like that to get the deal. But because of COVID, we got like a 12% discount off of the owner had it under contract before COVID, right? Mm-hmm. Lined up to go to closing. Buyer backs out because COVID hits. And the buyer was going to use something called bridge financing, which is where you get really high loan to value on your purchase price, 100% of construction. And bridge financing is a phenomenal way to finance a deal. But it just, bridge financing is pretty much dried up. And so that borrower could not do a bridge anymore. So they canceled the deal, right? And so there are deals to be had, and the seller is motivated. They're ending one partnership and starting another one, so they need to sell to close out their books and to close out this partnership they have, and so they're motivated. And so the purchase price is not good; it's great, and we're super excited about the deal, about the location. I think that given COVID, that we should all look for a location. We should try and get better locations geographically because of COVID. North Carolina, one of the best states to invest in that from what I think anyway. I'm biased because we already own there, but it's been a great market. The next thing for DeRosa is where I think that real estate is going to start going, and where I think that specifically passive investors are going to start going. And that is a blended fund. I think that the days of folks saying, okay, here's the property I'm buying. If you want to invest, you're going to invest in this property, 123 Main Street, and we're going to sure cross our fingers and hope our business plan works. Off we go. And in the up market, that's okay, because likely all those properties are going to do well. But with COVID and with the potential recession and with everything else that's in the pipeline, diversification makes more sense, and exposure to opportunities makes more sense too. And so we're going to be building a diversified fund that invests in not just different deals, but different deals, different operators, and different asset classes. And so we're going to build the diversified fund that's going to produce, at or better rates of return. But because of the diversification that we do, we're going to be able to offer other benefits to investors, including pass-through tax benefits, but also liquidity. And, when can you invest in a syndication and have your cash be liquid still? Through liquidity, we can offer the opportunity for investors to get in, get out. So that's something we're building. We're in the middle of building that diversified fund, which I'm super excited to launch when we do, probably towards the end of the year. But that's next for DeRosa. And then I really want to start flying our Transforming Lives flag a little more about how what we do can really, really benefit the rebuilding of America and the rebuilding of the benefiting of people's lives. And we really want to take that public beyond the typical circles that the three of us swim in, like kind of more national, and more national marketing, more, more bigger brand advertising to try and expose a lot of America to alternative investments. I hope that helps. And I mean, I can say all the people on my real estate team, none of them are employees, and they all had their own businesses, and we just formed a collaborative. But I think that it takes a certain level of tenacity, a certain level of facing adversity and problems and being willing to stay in it and not quit. I think that's just required for this business, because this business can be like strapping yourself to a rhinoceros, it just doesn't want you sometimes sitting on it. So it likes to try and, buck and everything like that. So there can be rough days in real estate.
Yeah, I'll throw my 2 cents in, and I've got this plastered all over my wall.
There you go.
For the camera so you can see it, hustle. So my big burning why, is similar to yours. I've been in the military, and it's not an easy life for families. And I want to be able to maintain the same standard of living and get out of the military so I can spend that time with my kids. So I got that big burning why, and I remind myself of it. I've got a countdown. Okay. I think I'm going to my last day in uniform is going to be August 5th next year. So, today that is, 371 days away. So, I've got that countdown. I got my big burning why. And, on my wall, it says hustle, verb, the most important word ever, so I've got a definite timeline. I've got a big burning why. And I got constant reminders that I need to keep hustling to make that come to fruition. And that helps with the tenacity.
I love that banner. That's so cool.
So my attorney actually sent it to me, and, my SEC attorney. So I saw that, and I'm like, that is absolutely perfect. We're about out of time, guys, but I appreciate both of you guys for coming on the show. I appreciate the value you brought. And Katie, I really, really appreciate your situation, what you've done. And I think being a military wife is probably the hardest job in the world. And, you handle it with grace and, a lot of thinking outside the box to get things done. Matt, I've been a fan of yours for several years. So, appreciate you coming on the show. So one question for both of you, and Matt, you go first. How can our listeners get in touch with you?
Sure. They just go to derosagroup.com, DEROSA group.com. On that website, they could buy a copy of my book. They can hear more about investing with us if they're accredited investors. They can get in touch with a lot of our education outlets, including my YouTube channel and my wife's Real Estate Invest Her show. That's derosagroup.com.
All right, perfect. And that'll be in the show notes. Hey, once again, thanks guys for coming on the show. Really appreciate the time that we've spent together today.
Thanks, Brian.
All right, and that's a wrap.